It is the best time for a loan seeker in India. Another major corporate made its presence felt in the lending space. That's right, Mahindra & Mahindra Group have upped their game in finance. The group bought 3.5% stake in the RBL Bank on Wednesday. It is speculated in the market that the group may expand its stake to 9.95%, touching the threshold limit of 10% set by the RBI. After the news, shares of the RBL Bank went up by 7% to 239.2 on the NSE on July 26th. However, Mahindra & Mahindra shareholders did not like the news. The shares went down by 7% within a few minutes of the market opening today on July 27th. Mahindra & Mahindra's foray into the financial services signifies a larger trend in the lending space. Recently, Jio Financial Services was demerged from Reliance, giving a market signal that the newly created financial entity is wide open to raise money from the market independently. Major corporations of India have upped their game in the lending space in recent times. Apart from Mahindra & Mahindra and Reliance, we have Tata Capital, Godrej Capital, Aditya Birla Finance, Adani Capital and Bajaj Finance. So why have Indian corporations been upping their game in the financial services? Well, according to research by Praxis Global Alliance, India's lending market will touch rupees 176 trillion by 2026 at a compounded annual growth rate of 12%. According to a recent report by the Bank of Baroda, in spite of high interest rates, India's credit growth will increase by 15% in 2023. This makes it amongst the highest growth sectors in India. With the largest middle class and young population on the planet, demand for loans and credit is expected to rise. Prime credit drivers are retail, MSMEs and personal loans. Most of this is through banks, who are very stringent in loan processing and charge nominal interest rates. Now that leaves space wide open for NBFCs and digital lenders who give riskier loans at high interest rates. Debt and credit is the prime driver of the major global economies like USA and China. With growing demand, India too might catch up with the trend. But there is a catch. RBI has made the directive very clear that corporations cannot own more than 10% of the banks, and neither they can be promoters. And that is why major corporations have ventured into the NBFC lending space. Now, riskier and defaulted loans lead to stress in the system, and the RBI has been very strict about maintaining low NPAs. With recent predatory lending practices and hyper competition in the space, there would be newer tools to lend out money, and that might lead to more defaults as well. Irrespective, lending space of India has to be watched closely. And we will give you a close watch. Subscribe to Live Mint.
Should I stock up on some global brands?
Diversify investments with global stocks. Invest.
Diversification is interesting. Should I invest in global markets?
You only progress when you ask better questions. Mint. Think ahead, think growth.